Now we're recording. You guys know I need my music in the background. Very important. Okay, 1 second. Like my lo-fi beats. All right, so I've been speaking about 2 plays. One I'm very excited about. Another one I'm also excited about, long term, 1.5 years, time bought, so 2021. That play is going to be United Rentals. I'm very sorry about that. Which is URI. You guys know this is one of my favorite plays besides GWW, Zoom, Yum, Regeneron, MET, Trill, ANTM, CTSH, Pru. I can go on. UNH. I'm going to actually start with the one that has my attention, and that is Zoom. I actually gave you guys, if I'm correct, Friday, an alert for actually URI, not Zoom. The last 5 minutes of close. So here's Zoom daily. I actually want to show you guys something. And what you guys see here is, let me actually take the volume off. I have the volume just to see, give myself an idea. So we're currently looking at the daily chart. I mean, this is very, very bullish. You have gap up, then fade, but it's still in an uptrend. A nicely presented uptrend, I would say, because this trend is basically very sexy to me. I'm actually working, as you can see, I have 2 extensions, and I actually have the extensions off, which is extending it to the right or to the left. I have that off so I can basically have it controlled, and I can just see exactly how price is. So first thing I did here, I'm going to show you guys, was I did an extension. I'm going to actually remove it and remove this one. The purple, I'm going to show you how I got to the purple and why I got to the purple. You don't just make boxes for no reason and think that's the prediction box. It doesn't work like that. For a lot of you that do that, I see it a lot. So I always start with my extension. Please turn off your videos. Thank you. I'm taking this low here as of January, February, March, April. I'm going to move it up to this high here of May, as you can see, which is here. I like to pull it back here so that each level actually reflects all the past levels. And I'll pull that down to here to where it based at before going higher and continuing. So I'll pull it back to around here. Now, these levels actually play a big part in what's currently happening right now. Double bar happened. We gapped above that. And we gapped from, which is major to me. And this is something I'm actually looking into. A lot of backtracking with my extensions, because my extensions are not the same as everybody else's extensions. I have it a certain way for a reason, because I'm trying to predict patterns and setups and when they're going to gap or when they're going to gap up or gap down. And as you can see here, we have a double bar closing, which is right here. Let me turn on my annotations. And I'm glad to see you all here today. I appreciate that. So if you look here, this is a double bar. Price closed just at the double bar, 79.65. I'm not sure what the chain of events was. Probably was a reporting or something like that, some news or whatever it was. But we got up to the upper fib combo above that. That's majorly bullish for a continuation on the upside before it basically hits resistance and comes back down and fills that gap. But technically, there's no gap that really needs to be filled, which is actually filled here, which will coincide with this level here. So that's basically constantly closing the gap. So I look at patterns like this, double bars, right? So I created this double bar, right? So I'm going to clear that. Oop, I didn't mean to clear all the drawings. Now, what I'm going to do with my extension here is I'm going to cut it in half. Or you're going to see what I'm going to do, go to Edit Properties, Extensions, Off. Now it's going to be half. Bingo, right? So I have it up to here. I leave it right here where it's at. So then from there, what I'm going to do now is I'm going to do another extension. Now my new extension is literally, I'm actually going to I should duplicate this one, but basically my new extension is going to string off from here, from the 7360 to 7363 level. I'm not even sure if this is actually accurate. The low here is 7358. So I'll drop it down 73, get as close as possible. I'll take it 7356, doesn't even matter. No questions, please. I said no questions. Thank you. After, you can ask all the questions you need. So now I'm actually pulling from that level and I'm going up to this all-time high here and to the recent pullback to down here. What I just did now is I basically just set up a new double bar on a separate extension. Now that double bar is basically similar to our double bar from over here. Look how price reacted with the double bar. It was a resistance level, right? So with that being said, I'll draw the lines here, double bar, closed above the double bar here. Within the 14 and 30 SMA, you guys know how I am about that. Price stays in there. Now that 14 and 30 are going to pinch, and then it's either the 14 is going to basically bounce off of the 30 and move higher. They'll slightly cross in some sense, and to which the 14 will be below the 30, which is always even more bullish to me. But the 14 doesn't have to always go below the 30. So so the play for this one is we already have 100 calls, right? For this month. But I'm also looking for not this week's, next week's 99 calls, and the week after next 104 calls. Now my target is as followed. We gapped up here. It's not saying that we're going to gap up Monday and have a big gap up like this. This was like basically a 20 to 30 point gap up, or 20 point gap up here, but close to 30. 26 point gap up, right? Then it continued for another 10 points or 8 points. That week was like a 30 point move. So you look at those things. So what I'm looking at, the reason I'm looking at 100 calls, and you can see this red dotted line here to the right, horizontal. Well, sorry, vertical. This vertical line here, right here, is where the expiry is at for 7/26. That's the following week. So those are the 104 calls. I even did option profit calculator. I did basically a premium test to see how the premiums will respond, how they react. I'll show you right now how they should react. So what I'll do is, because D taught me about this, I appreciate him for this because it saved me a lot of time to go into options profit calculator. So what I'll do is, in this trade tool, I'll put in ZM, which I have already done. Let me remove my arrows. All right, so I'm looking at strikes for this week. Looking at, actually not this week, next week. So what we're gonna do is, let me get out of here. Yeah, next week, this will be the 19th. All right, so everything's already in. I'm gonna reset this because the price is not there. I'm looking at a 15-point move this week. Not saying this is gonna happen, so do not buy, oh, and then just predicting a 15-point move. So I'm going to buy the 102 calls for this week. I'm going to buy 200 contracts or this and that, such and such, whatever. I'm going to go heavy in it because he's predicting this. No, it doesn't mean I'm right. I might be right with the move going long-term, but it doesn't mean I'm right with the time. So with that being said, you play in the money, you'll be guaranteed most of the time to profit as opposed to playing out the money. But if you're playing out the money, you buy time. You buy enough time that it basically goes hand in hand with basically the range of each week. And by that is, you guys know I trade off for weekly range candles. Last week was a 8-point move for ZM. Prior week, actually, I don't know if it was a small range. So it was an 8-point move. Week prior to that was about 27 points. So I'm looking at least 15 points. So a middle number, 15 points. Max 15, minimum 8 points for this week on top of where we currently are. If we get a gap down to the double bar, I am opening a big long position for that following week. I might even go for the 104s or the 100 calls for July 26. So this is a 15-point move by next week, right? So I put that in there. That puts the price at 106. If you look at the 99 calls, are these the right ones? This is July 19th. Yes, this is the following week. So was it the 99s? It was the 99s. Okay. So was it July? It was July 19th, right? Okay. Oh, I got to change this. Okay. That's what I messed up at. Okay, here we go. Perfect. Now that's fixed. All right. So July 19th, 99 calls are around 185 to 240, right? Oh, this is the 26th. Oh, I'm so sorry, guys. I knew I wasn't bugging because I'm like, wait, this doesn't look right. So July 19th. Here we go. So I'm looking at the 99 calls. They're trading around 110, 135. I was praying that we get a gap down to the double bar here. That gap down here is similar to here as we traded off this. This was traded off that double bar. 89.52. That will put the option premium. This is basically 89.52 is also the 30 SMA. A gap down open or open around 89 or 50, 89.52 or around 90. I would take a nice large size and see how that plays out the next 3 days. As long as price gets over 91.04 by Wednesday, those 100 calls will be paying, or the 99.50 calls or 99 calls will be paying nicely. Target on this trade, by then, I'm looking at somewhere, oopsies, annotations, where are you? Thank you. First target, 99.56. 101.93. These are what most resistance are. 110.35. Everything's always subject to change. This is giving you an idea, just showing you how it works. So price here, if you look at how price reacted here, get the circle, bounce off the gray bar, then test the gray bar. Took a couple of days, but it did test it. Bounce off the gray bar, test the gray bar with time 726. Looking at 105 calls or 100 calls. Or if I want to get the same price that I want for the 99s for July 19th, the 99.15s are 99.50, sorry, are $1. So if I want to go another week out, July 26th, I can go a little bit higher. Similar price to that would be the 103s or the 104s. This play would possibly play out at least 200 to 1,600%. It's a possibility, not a guarantee. But if the more time you buy, the more upside you have and the more gains you have. If this play does actually work out the way I'm looking at it. I like this one a lot, guys, and I'm talking about a lot. This one got me very excited. It got me super excited. Everything just lines up very well. Oops, let me turn this off. You can see the trends, you can see the patterns. I even looked at, and this is Zoom, right? Use a channel. This all lines up perfectly. I can even have the channel play out just like this to where the target is 99 or 100 before it pulls back to 95, 96. So with this trade, I will be playing size with time. And with that being said, I would also be playing weeklies as well, just to basically take advantage of any short-term upside or downside. So if I'm in a long-term position, I'm buying calls 2 weeks to 3 weeks out, I'm going to play the weeklies on the short side, even on the short side and on the long side, because you know the premium, you get a bigger premium opportunity when you're playing weeklies. And this is why I like playing weeklies. For people that have big account sizes, you always play monthlies because you'll still get 20 to 25%. If you're playing with 10K, that's a lot of money, you know, for most people. And this is just basically how I'm playing this out. I love this setup a lot. I don't fall in love with stocks. I just fall in love with setups. There's a big difference. You fall in love with a ticker, it will burn you. So Zoom is going to be on the list. This is exactly, as you're going to see, you can see everything on the side, guys, that I have. Oh, I hate pressing things I'm not supposed to be pressing. Hate when I do that. Always do that. All right, go back to charts. Thank you. Turn this off. All right, perfect. All right, so you have Zoom, 94 calls for this week, playing weeklies, and you have the 100 calls for the next week. Then you have the 104 calls for the 120 for the 26. Next ticker at hand is URI. This one had me charting for freaking 30 minutes. Not Zoom. This has me. Why? I'm going to show you why. Prediction boxes. Just looking at the trend for this one is disgusting. You guys like to see the breakdowns and everything like that. You see my vision, you see my visual. That's why I call it a visual, so you guys see what I see. And as I take everything off, you guys are like, oh, wow. Now I still see the same pattern that you have drawn even after taking it off. So these blue lines are actually ER. This is when the company reports. URI reports next week. Not this week. We're in position in the 150 calls. Why? Target is 154. Gives us enough time. Plus, we can catch any ER run-ups, which are always the best thing to do. So look at this trend. Amazing. Beautiful. From 2009, peaks at 2018, 9 years later. Finds a slight bottom at $2.37. Imagine being long this. If options were available by this time, bought some leaps, you'll be rich. So let's start. So I did an extension from this low to this high in 2014 to the low of 2016. Everything plays the part very well. You can just see off of this one extension. I'll do the extra extension after that, but just see how it plays off. I like using the arrows as opposed to the circles. But look at that, bounced here, bounced here. This is a big level. This gray area is a big level. If it can hold here, it would do great. So when they report, which is here for this blue line, see, the last time the report was here, I did a prediction box on it just to see how the price would move. And this is the stock that every time they report, on a daily, it basically sets up at the 14 SMA for a nice bounce. I'm not saying this is going to happen again, but this is basically what I've been seeing just looking at it. So I'm going to show you now. Remember, blue lines is when they report, right? So last time they reported, get you guys in here. You can see that gap up. Following day, let me move this right here. Perfect. 14 and 30 SMA, close there, and then gaps up and hits that red trigger. So what we're looking for here is a similar setup. They got us already at the 14 and 30 SMA, and we're working off the 129.02 gray bar level. Target is 150, purple level, and that's where our little purple bar goes to. They also reported here, do a duplicate, the areas where they reported. As you can see, everything happens after the 14 and 30 cross. Similar setup, similar bounce area. bounces off that 108.50, comes up to about 140, comes back down to 108.50, has to break this level here. So target would be somewhere around here. So my thing with this one was leaps. Why leaps? I'm gonna give you the bigger view. 2021. Monthly candle is gorgeous. Let's clear this out. All right, this is driving me crazy. If you're new here, please do not comment until I say to comment. The video is still recording. Thank you. Here's a monthly view, right? Let me actually take off this blue line here. Keep the other ones that's already there. So I was doing prediction boxes. This setup is similar to this setup here. So from this gray bar up to here, right? So I'm actually take this extension off. Makes that much more better. Let's edit. Let's just remove every number there because we don't need to look at any numbers right now. Turn this off. Okay, perfect. Move that back. Well, it goes up. Yeah, let's move it back to here. Perfect. And then my next level is going to be starting from this gray bar here, similar to the other one, to this top here, and to the recent pullback here. Same thing. Turn off extensions. Don't show. Perfect. So it gives you guys an idea of what I'm seeing and how I hunt and how I am able to choose what strike I want. Actually better off on long terms than short term. I'm actually gonna move this blue line because I already know when they report. I'm gonna remove this blue line as well. Make everything more clear. So this, see, after we topped off around, what was that? High is 190.74. We came down to the low of 2018, which is 94.28, right? Here, after we topped out in 2013, high of 119, and 2016, low, wait, actually 2015, low was 41.90. And then we took off. So here, we possibly bottomed here. We're gonna build for a little bit, test this 150, it might come back down, bounce off of the 30 SMA once we get above it, and then take off and go for 220. My target overall is 250, well, 240, which is above here, 244. And I'm gonna tell you guys why. So how I do my extensions, how I do my box, my predictive boxes is I draw it from the all-time high to the pullback until where it breaks out at, which would be somewhere around here. So this is where the breakout actually happens. This is the duration of the time that it took for it to retest the all-time highs and then break out and then continue, right? So I'll duplicate that. I'm not saying it's gonna be the exact same thing, but from this all-time high here to this pullback, and if this happens the same, it just, the range, the length of time, we have a couple of more months to go for this to actually happen, and it should be breaking above what, 200 by next year, mid next year. What was that, 29? Was this 20? We're in 2019, so this is 2020 here and 2020. Okay, perfect. So then I draw another box. This box is gonna be a different color. It's actually from where the breakout happened, the pullback of the breakout, because if it comes back down before it tested all-time highs. So I'm gonna change the color of this, and I'm actually gonna duplicate it. Make it a good color that's not too bright or anything. Perfect. I'll duplicate this area. And I'm gonna move it. So if this was to pull, so it would break out around here. Pullback is where there's a lot of congestion at. The congestion is where the previous breakout is at. So it'll be somewhere around here, but we can give it, see, sometimes these boxes line up so perfectly with the extensions. This is why I like it. So all the congestion you see, this is an all-time high, right? Then this is an all-time high breakout. Then we come back and congest down to here, which was also a previous resistance here. So now we come up to this top here. We want a breakout to happen here, pull back down to here or here, where this is a lot of congestions here. You see these levels, you see the congestion where the price trades at a lot would be support and resistance area, which it could trade at that level at the top or at the bottom. At the top is considered resistance. Here, down here is at the bottom, support. So this would be the demand. Supply, demand. Feel free to take a screenshot too, even though this is recorded. Because just giving you the visual, you guys would be like, oh, okay, I know what these stand for. I know what these circles stand for. I know what Ninja meant when he did that. Supports. And then from this, I come to a conclusion. I come to another pattern that I seen, which I drew a channel. And my channel actually came from this all-time high to this all-time high, but it actually lined up with these pullback tests, as you can see here. Nutty, right? So I'm going to clear this out so it doesn't look too crazy. Actually, let me just take a screenshot of this. Perfect. Got that. Good. Okay. We got that out of there. Now let me just clean this up. Perfect. Now look at my channel. This is why I got the prediction box. Because once that price gets above the middle blue channel here, which is also a trigger, and it works similar to here, that's what we want. We want it to get somewhere around here. Target is 240, which is 2021. So that would pay out probably about 300 to 400%. So this is something you can sit on. A lot of you are like, oh, well, I want to make my money quick. You're not making money quick. You're not gonna make a decent amount of money or a good, like this is gonna be basically long term. You have a year and a half. You can sit on it. So if you want to park in 2,000 and not think about it, you put it into something like this. Me, myself, similar. I'll put 5,000 into it, see how it plays out. And you can still play. And I tell a lot of people that trade commons, if you're long in commons, you can short with options. You want to basically grasp any opportunity there is. Any opportunity. Like I can be long and people be like, oh, you're short now? I'm like, I've been short, but I'm long. Long term, I'm long. But I'm playing the short side and I'm catching as much profit as I can on that side as well. So for this trade, it's a longer term trade. I've done the math. I'll give you a breakdown on how the math looks. URI. And the highest they go up to is 240 for these premiums. January 15, 2021. 240 is the highest. They're pretty cheap. By the time you hit the price that's needed, actually let me reset. All the way to that year, 2021. I'll go to December just to give it some time. All right, so December 20. Prices, I'm looking at an increase of almost 100 points until then. So let's say 100 points. Or make it, because you want to get it around the premium, where the premium's at, so 115. So 247. Let's just say 247 December 2020 of next year. We hit 247, right? So the premiums for these would be at $12. I can even drop it down to 110 points, 242. And the premiums will still be up. I can even bring this down to 100 points, 232. And it'll still be 100% gain, no matter how you put it. It's just going to take time. But it just gives you an idea of how these things work. And if you feel, see, it's actually, if you played, like if you look at these, I'm actually going to show you right now. Here. this is the price of the options are going to be at that price that it hits. And this is basically, if we go for the ask, right? What makes more sense? Parking, buying 2 contracts of the 115 calls, right? At 36.20. And by the time that the price hits 100 and 230 or 220, they're going to be worth $118 per contract. More better upside with this one. This one, you get a 75% gain. Actually, more than that. Sorry. 200%. You just going over each of them. This one, you get like a 400% gain. Actually, 500%. Just close about it. This one, 9 to 48. Just look at, this is how you can, this is how I do it. This is how I figure out what I'm going to trade. What makes more sense? Should I play in the money? Should I play out the money? This is why in the money is actually more safer than playing out the money. Sometimes out the money is like too much. You won't get that boost that you want, that extra premium. So that's another one. URI ZM. UNH took off this week. And we're going back to not playing so many different names, guys. Like, if it's a lot of names, it's going to be lottos. 2 cores, and the rest are lottos. This one, I feel like they're accumulating it for something. Something big is coming for UNH. They got a target of 250. 2 weeks out, even if it hits it this week, looking at 2 weeks out, they rejected at 247.77 level. But we got a nice double bottom on the daily. Here's the weekly. I don't have any options set up for this one yet, but I actually rather play these and choose the options as the day goes on, as opposed to having options lined up. This bullish Harmony. Oh, not Harmony, sorry. This is a bullish homing pigeon. It's basically an inside candle inside of the weekly. I like it a lot. I want to see over 247.77 on close by Friday, which definitely is not out the question. 250 calls as a lotto. You have the 257.50s 2 weeks out with time. I'm actually going to add that to the list right now. Filling it up. So this week's 245s are pricey, $4, 247s, 259, but we're not looking at those. We're looking at 250 to 252 for this week. So the 250s are 148. By Monday, by tomorrow, they should be at least 120, maybe a little bit cheaper, depending if we get a gap down. I always pray for gap downs, especially low value. That 247.77 is very important. Price needs to hold above that to get to that 252.45. So 250s are actually under $1. The 250s will actually be more better, more safer. So I'm going to add the 247.50s. I have them already. Okay. 252s, I'm adding those as well. I'm adding the following week, July 19th, 257.50s. And I like to, like, if I'm playing out the money and I'm buying more time, I like to let my time be equivalent to the weekly. So if I'm buying, let's say, Zoom 95 calls for this week and they're like $2 and the price for Zoom is 90, let's say 93.50, but next week's 95s are $2, I'd rather play the 95s for the following week than play the 94s for the same week. You got to look at stuff like that too. That's mispricing options also. Sometimes it just doesn't make sense. You're like, well, these options are more cheaper for the following week, just one extra point as opposed to the current week. So look at that as well. So UNH is definitely on the list. Still in an ascending triangle. Needs to get over 252.45 to break. Then we'll touch 257. And then we have this level right around 259, 260. Next up, see, I'm actually keeping it short and simple. Those things been the only things I've been watching. VRTX. I love that name. I like it a lot. It's still trying to find itself currently. Still in a trend. Maybe come back down to 173.22. Short the 175 puts with time, just in case. But if you do a short time, if you're gonna do short term shorting on weeklies, try to do short. Like I was short 175 puts, and then I would roll into 175 calls when it gets down to 173.22, which is the bounce area here, to go long. And then I'll either roll it out to next week as well, the 177s, because the 177s come a lot. So 180, so it's been trading in between 173.22 and 184.58. Once you get the pattern, it becomes the norm. Like it becomes easier to trade. I also have these little signals that, like something like this. This is bullish. This little purple thing here. I forgot how I added that, but I added that there too. Looking for one more pullback to at least 173.22 for a bounce. This inverted hammer does not really mean much because the price can definitely open up Monday at 178 and then take back off to 184. So playing the 180s would be the smartest thing to do. But we'll see how everything trades off of Monday. I just want you guys focused. I want you guys stop and do me a big favor, people, team. Stop trading off of other people's tickers unless you can afford to do it. Because I don't like to go into the off-topic floor and see somebody complaining because they follow somebody else's ticker. They blame themselves, which is they should blame themselves. But why do that in the first place? If what worked for you last week worked, why follow somebody else to get the extra edge? You're not getting an extra edge. You're just throwing yourself off from what you've been doing. This is SPY looking at 302.95. Overhead, big level. This trend in SPY is still bullish until it goes against us. Let's see what happens this week. And always remember your vacuums. Always use the daily and the weekly for vacuums. You can also use hourlies too, but it doesn't happen. You'll see when the vacuum is going to start happening on a daily and weekly only. You will not see it on a hourly chart or intraday chart. Crazy how SPY just hits levels. See, we're already backing down, so we're gonna get a little bit more room up until we come back down. I'm ready for this week, guys. Hope you guys are ready for this week. I'm gonna start recording right now.